In today's episode, we're going to be focusing on the Pi cycle indicator to better understand where exactly is Bitcoin going to be topping in its bull market according to the Pi cycle crossover, because after all, every time historically we've seen a crossover in the Pi cycle moving averages, that's when Bitcoin used to peak in its bull cycle. It doesn't look like it's happening this time, so let's talk about it. Subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward, and let's dive right into it. But before we dive in, a quick message from our sponsor. Our sponsor for today's video is bitfinex, and they are a really great crypto exchange for you to consider for your daily crypto trading and investing. They are a no KYC, no VPN futures exchange, and their liquidity is on par with the top exchanges. Users can trade over 700 trading pairs with up to 125x leverage without restriction. And to celebrate our partnership, we're running a very special offer. From September 2nd until October 2nd, you can sign up using my link and deposit $100 to get a 20% deposit rebate and get up to $2,000 trading bonus when you trade on bitfinex. Deposit reward will be distributed on every working day, and trading rewards will be distributed after the campaign ends. And for more info, check out the link in the description down below. Thank you very much, bitfinex, for sponsoring this episode. Let's dive right into it, because this is Bitcoin's price action here, retesting one of the Pi cycle moving averages as support. But the key thing at this really late stage in the cycle is a crossover from each of these moving averages. So we need to see a crossover, a convergence in between these two moving averages, and we're not really seeing that like we've seen in prior cycles. We need to be seeing a converging, and we're not really seeing that compared to what we've seen in the past before. And in fact, we're getting the opposite. We're getting divergence, which isn't really a recipe for success when it comes to timing the bull market peak here. Right now, the 111-day moving average, this orange moving average, that's 111k at this moment in time. The green moving average is closer to 200k at this time as well. And when we're looking at prior cycles, usually we'd of course hold the orange moving average as a support, and we've been doing that roughly speaking throughout this current cycle. But then later we get to the green moving average, and then we even overextend beyond it. And obviously we're really far away from that even happening. So historically we've seen tremendous overextensions beyond the green moving average. But what if they've been diminishing to a certain extent? What if we're seeing smaller deviations as a result of maturation in the markets, as a result of diminishing returns in of themselves, but also diminishing deviations beyond the green moving average? At some point you have to wonder, well, we rejected from the green moving average here in 2024, already showcasing that those deviations are getting smaller and smaller to the point where we're not really seeing deviations. We're having picture perfect reactions from the green moving average in of themselves. And maybe those deviations, which have been larger, smaller, declining, getting to the point where they're now at resistance. And then maybe we actually peak having fallen quite considerably short from this green moving average. What if that's what's happening right now? And that's something we need to consider, because as we're getting to these final stages in the cycle, we're not really seeing a crossover get any closer here. But we've spoken about those green moving averages. What about the orange moving average, which is a key support retesting moving average here, suggesting stability for Bitcoin's price action? Well, if we look to not too long ago, actually a few months ago, we saw quite a bit of a deviation below the orange moving average before we saw that get retested into support. And we're seeing a deviation once again, but that's a much shallower deviation overall. And in fact, if you look even further than that in this cycle, then those deviations have been not just deeper below the orange moving average, but also quite prolonged in terms of how long those deviations have lasted. And now we're actually seeing a shallower deviation and also a shorter deviation by the same measure. So that's a pretty interesting observation, how these deviations, 25% back here last year, roughly speaking, then 22%, and now only 2% to not even 3% really, and over a period of quite a few months initially, then cut down by, let's say, 33%, roughly speaking, to now cut down to a fraction of what it was and a fraction of the depth retracement as well. What if we're seeing something happen quite interesting in the sense that we're no longer getting to the green moving average, we're actually falling short of it, and we're also performing downside deviations which are lesser in retracement, and they're also becoming shorter in terms of those deviations as well. So the treatment of these moving averages is becoming quite clear as we get to the final stages of the cycle. I feel like we're going to be missing this green moving average in terms of getting to a bull market peak. I think that missing of that moving average is going to be quite considerable, because when we saw those deviations they were larger initially, smaller and smaller, and then we actually reject picture perfect from the green moving average. Maybe we're now getting to the point where we're going to be missing and progressively missing this green moving average more and more as time goes on, as we see diminishing returns and as we see lesser returns for Bitcoin's price overall. And this late stage in the cycle, we're seeing lesser deviations be below the orange moving average, which just means probably we're going to be maintaining somewhere in the vicinity of generally above the orange moving average, and trying to get as close as humanly possible to the green moving average, but not actually getting close to it, not actually peaking at that price level. And of course, it has to be said that this crossover probably isn't going to happen, because if we look at historical cycles, and maybe even before we look at those historical cycles, propagating these moving averages into the future, what has to happen for price at this late stage in the cycle for these moving averages to get closer, to actually start converging, because they're really diverging quite far away from one another. And it's been a metric we've been looking at for a while, and we've been talking about how this convergence needs to be looked at. We need to propagate these moving averages to better understand at which point we're going to be peaking. But we're getting to the final innings of the cycle, most likely here, because many people are also talking about extended cycles. We're getting to the final phases of the cycle, and even if we get an expanded cycle by a few months or even just 30 days, how much does Bitcoin's price actually need to rally to get these moving averages away from divergence and actually get them into convergence? That all really takes time. And so for these moving averages to cross over, a lot has to happen in Bitcoin's price action in this final phase of the cycle. And even if we do see an extraordinary rally of some sort, even to 150k, 160, 170k, still we'd miss the green moving average by considerable margin. And still those moving averages won't inflect as quickly as we'd like for a crossover. So there's a very good chance that we miss this crossover overall. Obviously, if we do break out to some crazy numbers, this orange moving average would really start to flick up. And if we do propagate that into the future, then maybe we would get a propagation for a bull market crossover here to end the bull market, a pi cycle crossover. But that would get us into probably deep into 2026. So I don't think that we're going to be having a pi cycle crossover in this cycle, which would help us with exiting our positions. I feel like this might be the first cycle where maybe the pi cycle crossover doesn't give us that all-important signal, seeing as we do have less and less time left in the cycle. Because if we think about what has happened in 2017, we saw a post-halving peak in Bitcoin's bull market 518 days after the halving. And what we saw in 2021, that slightly extended by a month or so, where we saw a bull market peak for Bitcoin's price action 550 days after the halving. So if we do see history repeat, either we peak this month or we peak next month in 30 days or so. And really, it does look like we're not going to be peaking in this month. So it does come down to either mid-October, or if we're seeing an inclining in the amount of days that it takes Bitcoin to peak, maybe we're going to be seeing an incline by 30 days or so, which could potentially give us that bonus month going into mid-November. Really important, however, not to be moving the goalposts constantly. But if we're talking about lengthened cycles, then there is a reasonable measure of that lengthening. But most people think that extension is going to be far greater than what is potentially reasonably possible. 30 days, it looks like, would be a natural lengthening in the cycle, getting us into mid-November. But even if we're thinking about how much Bitcoin could lengthen while keeping 4-year cycle tendencies intact, technically we could lengthen all the way into the 31st of December, peak on the 31st of December of this year of 2025, and then start the bear market right there and then. That would still preserve the 4-year cycle tendencies while extending the cycle a little bit more than expected. So it does look like we're getting 30 days each cycle, but to get to deep December, we'd have to probably extend into the bull market peak by some 600 days, maybe even 620 days after the halving, which is quite a bit of a change, quite a bit of a delta compared to what we've seen in the past. So could we really reasonably extend by that much? What's pretty clear is that we're slowly going to be peaking in the bull cycle. We have little upside left overall, and we also have little time for that upside left. So Bitcoin generally as a investment going forward is going to be yielding much less return for greater risk, because of course there is going to be a greater risk for a bear market. And what was once a reliable indicator in the pi cycle top indicator here, we don't really have to rely on any longer. We can't really rely on it because it does look like it's going against the grain of history, and it doesn't look like we're going to get a pretty valid signal, and even if that signal comes in, maybe it's going to be a little bit too late for us. So the pi cycle crossover still worth looking into, but we have to be critical and we have to be reasonable. How helpful can it be at these final stages of the cycle where slowly but surely we're running out of time, running out of upside, still a bit of time left, still a bit of limited upside left, but how can we best time that exit from the market slowly but surely as we approach the final stages in the cycle? The pi cycle might not be as helpful as we once thought. Thank you so much for watching, and subscribe to the channel for more videos like this in the future. Like this video if you enjoyed this one, and I'll speak to you in the next one. Speak to you soon.